The word used was the government is not in favor of any knee-jerk reaction, so we should not anticipate any sort of forward-looking either statements or measures from the government as far as these recommendations are concerned.
The government will also get inputs from all stakeholders, and government thereafter will take a considered decision. At this point of time, I would like to say through your channel that there is no reason or need for the market to react adversely or to sort of panic in any manner, if I can use that word.
It's too early to say what view the government would take, but the government would certainly not take any such action in a knee-jerk reaction, particularly one which has any adverse impact on the investment environment.
Our overriding priority and objective remains ensuring an excellent investment and business environment in the country. So we will naturally take all of that into account when we formulate our policy.
Well, P-note panic gripping Dalal Street soon after the opening bell rang, and in just 30 minutes the Revenue Secretary was on CNBC TV 18 live trying to allay those concerns. When the government wants to address the market, CNBC TV 18 is the preferred platform. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nenta. There's, bad news coming in. The former President APJ Abdul Kalam has passed away in Shillong. We understand that he was giving a lecture in Shillong and he collapsed while giving that lecture. He was taken to hospital and now he has been declared dead in Shillong. It's the end of an era there. We will, of course, pay tribute to the former president right here on CNBC TV 18. But the other top stories that we're tracking for you this evening. The bears return with a vengeance in Shanghai. The Chinese share market cracked 8% to mark the worst fall in 8 years. Aftershocks rattle Dalal Street as the Sensex sinks 550 points. P-note scare also spooks sentiment.
China triggers a global sell-off as investors run for cover across Europe and the US. Wall Street slumps for the 5th straight day, the longest losing streak in 6 months.
Crude prices are clubbered. Brent hits a 4-month low thanks to concerns over demand from China. Gold regains some sheen, but prices are still near 5-year lows.
We're going to be clearly victims of what in trade theory we call trade diversion.
The chief economic advisor sounds a warning on exports. Arvind Subramanian says preferential trade agreements between bigger nations is hurting India, calls for a competitive exchange rate.
I'm quite confident that we will definitely exceed the highest of any year. The highest was last year. I'm quite confident we'll exceed it.
Market environment remains challenging amidst the Disinvestment Secretary Aradhana Jory, but also insists that the centre is on course to record the highest ever disinvestment proceeds. That's a CNBC TV 18 exclusive.
3 civilians and 4 security personnel killed as suspected Pakistani terrorists attack a police station and bus in Gurdaspur in Punjab. 3 suspected terrorists killed after a 12-hour-long gun battle.
5 days and still no business. The Punjab terror attack rocks Parliament, but hope for the real estate regulator bill. Sources say parliamentary panel has adopted the report, which will be tabled later this week.
In a bid to clean up its books, ICICI Bank puts 2 bad loans worth 1,000 crore rupees on the block. Bids invited for Falcon Tires and Tulip Telecom accounts. That's a CNBC TV 18 exclusive.
Tech Mahindra is on target with second quarter numbers, but dollar revenues rise only marginally. Ambuja also in line with estimates, but margins nosedive.
We have 38 industrial parks in this state where land belongs to the government.
And also coming up here on the show, Bengal is the place to invest, says the state's finance minister Amit Mitra, as Mamata Banerjee embarks on a tour to the United Kingdom to woo investors.
All that and more coming up for you in just a bit. But the top story tonight, the Chinese markets crumbling yet again. The Shanghai composite crashed by 8.5% at the close of trade, suffering its biggest loss in the last 8 years. Now indicating that there is clearly no reprieve to the violent sell-off that the country's equity markets have seen. The slump was triggered by worries over the Chinese economy. The scale of the fall suggests that investors are losing faith in recent efforts by the government to prop up the market. That was compounded by a new survey that shows that profits at China's industrial firms fell by 0.9% 4.3% last month. Just last week, the International Monetary Fund, the IMF, had pushed China to unwind its intervention so that market forces could set the true price of shares. It's likely that that process may now be underway. Let's go across to CNBC's Sri Jayagaraja. He wraps up the market action from Singapore. Sri, not a great start to the week for China.
Volatility returning with a vengeance to the mainland China stock markets. Equities plunging more than 8%, their biggest one-day drop in more than 8 years, on signs that Beijing may be backing away from supporting the market. Concerns over economic health soured sentiment further. Official data showed profit at China's industrial firms dropped 0.3% in June from a year earlier, reversing a 0.6% rise in May. Index heavyweights, including China Unicom, Bank of Communications, PetroChina, they were all sharply lower, slumping by their daily downward limit of 10%. That's where we stand. That's the damage report from China.
The worst fall coming in for the Chinese markets in 8 years, and it does seem as if the government there is also trying to take some fallback measures. China to increase state buying of stocks, says the country's top securities regulator. And a lot more coming up for you later on the show. But let's tell you what happened in the European markets today. Europe too bore the brunt of the Shanghai. The frontline indices traded lower. The other factors that took a toll on the markets was the key meeting of the US Federal Reserve's rate setting committee late in the week, all of that beginning tomorrow. So as you can see, a sea of red across Europe as well. Across the Atlantic, a quick check on Wall Street. Shares are down for the 5th straight day. This is the worst losing streak in 6 months as far as Wall Street goes.
Well, the fall in China, as well as the SIT report, which red flagged the issue of P-notes, sent the bulls running for cover on Dalal Street today. The Nifty dropping 160 points, slipping below 8,400. The Sensex down 550 points, marking the biggest intraday fall that we've seen for the Sensex in nearly 2 months. The mid-cap index not spared either. That index closed nearly 2% lower. Let's go across to Anuj now. He joins us to wrap up the day's market action. Anuj, a terrible start to the expiry week.
Not a great start to the week, and it's expiry week, so it was a bit of a triple whammy for the market. Apart from the China issue, the China market was down 8%, and the whole P-note controversy that was there first thing in the morning. The fact that it was the start of the expiry week also meant that technically the market had that much weight to carry, and that's why you saw the kind of decline that you saw. In fact, the market decline was secular. No sector or stock was spared, and the market ended at low point for third consecutive day. Let's talk about some of the stocks then. In terms of heavyweights, the top 6 contributors to the market decline in terms of heavyweights were all stocks from different sectors. ICICI Bank, Larsen & Toubro, Infosys, all down between 2 to 3%. Not just that, we had stocks like HDFC, Reliance Industries, Tata Motors, all of them also down between 2 to 3.5% in trades. These were the 6 big draggers on the market, but these were not the biggest losers. Take a look at the biggest losers on the index. You had a Tata Steel, before that, just a word on the banks. Axis Bank, Yes Bank and PNB were all lower by about 3 to 4%. But in terms of biggest nifty losers, you had stocks like Tata Steel, you had Hero MotoCorp, both of them down 5%. Hindalco was down about 4%. Not just that, some more losers, ONGC, KN, Bharti, some of the stronger stocks like Bharti Airtel also falling in trade today, down about 4%. So it was a rough day. A lot of index stocks were falling 4% or more. In terms of mid-cap stocks, today was about earnings, and there were some positive reactions as well, apart from some negative reactions. For example, Jindal SAW and Geometric reacted positively to the earnings, while IOB was down about 6%. So as I said, the trend now clearly with the bears, and it will be interesting to see if that trend can change up until expiry, because expiry weeks normally are about momentum, and the momentum right now is with the bears.
So carnage on Dalal Street as well. Thanks, Anish, for joining us with all of those details. Will the Chinese market fall even further? Here's one expert with his view.
I think that we've had some problems here in our stock market for the past month and a half. I think China had been a leader to the upside. You're seeing divergences within our stock market where the advanced decline line, for example, wasn't making new highs as the stock market itself was making highs. Those sorts of things are disconcerting. The amount of margin that has been borrowed in China and here is disconcerting. I think you have some difficulty in stock prices, so other people may disregard or tell you to pay little attention to what's going on in China. I tell you to pay a great good deal of attention to what's going on in China.
Well, it was not just China. The peanut scare also played a part in today's sell-off on Dalal Street, and this despite the government going all out through CNBC TV 18 to try and allay fears. It all started with a special investigation team on black money, which raised the red flag on peanuts on Friday. The report frowned upon the transferability of peanuts. It says, and I quote, "Peanuts are transferable in nature, and this makes tracing true beneficial ownership more difficult." The markets tanked just a few minutes after the opening bell, and the centre swung into damage control almost immediately. First, it was the Revenue Secretary, Das. He spoke with me here on CNBC TV 18 just 30 minutes after the markets had opened and asserted that there was no reason for investors to react adversely. This was followed then by the Finance Minister himself. "Don't panic," said Arun Jaitley, as he also promised that there will be no decision that will be taken that could hurt the investment climate of the country. A few minutes after that, Minister of State for Finance Jayant Sinha also spoke exclusively to CNBC TV 18, saying the centre will take a final decision only after consulting with all stakeholders. Take a look.
Keeping in mind the investment environment of the country, as also the object behind the SIT investment recommendations, and then take a final view on the matter. It is too early to say what view the government would take, but the government would certainly not take any such action in a knee-jerk reaction, particularly one which has any adverse impact on the investment environment.
This is the third report of the SIT. We get proposals and inputs from many sources. This, of course, has come from the SIT relative to making sure that, the black money flows in and out of the country are curtailed, and therefore it is in this regard that the report has been submitted. Obviously, our overriding priority and objective remains ensuring an excellent investment and business environment in the country. So we will naturally take all of that into account when we formulate our policy.
So what about KYC norms? Do you think there is a need to look at the KYC norms as well?
I think the KYC norms, to the best of my knowledge right now, when you look at all of the sort of reputable firms that are issuing and working through P-notes, is actually done in a fairly clear-cut and I think a fairly rigorous manner. There will of course be some gaps here and there. There will be some areas where it's not being followed as well as it should, but we should close those gaps. But I think in terms of overall policy, I think it's generally being followed in a fairly rigorous manner.
The government will study them, and the government will also get inputs from all stakeholders, and government thereafter will take a considered decision. At this point of time, I would like to say through your channel that there is no reason or need for the market to react adversely or to sort of panic in any manner, if I can use that word, because the decision has not yet been taken and government will take a very considered decision.
What could be the possible timelines? You said that there will be stakeholder consultations. What could be the possible timelines by when you will start to take a considered view? Can you explain to us the procedure that you will follow from here on, sir, and the broad timelines?
Yeah, we have just received the recommendations a few days ago, and we are first internally examining them. And after that, within the ministry, of course, within the finance ministry itself, within the government, we will hold consultations, and also will take the inputs of the SEBI and the Reserve Bank of India and other institutions. And parallelly also, we will put it out. I mean, it's already there in the public domain. So we will sort of invite suggestions and observations and inputs. So timeline, it will be very difficult for me to give at this point of time. But definitely there will be wider consultation, and there is no need for the market to sort of rush into a conclusion as if, something has been decided.
If I could again specifically ask you about some of the recommendations, for instance, as far as inflows from Cayman Islands specifically are concerned, and the SIT has mentioned that it is, in fact, I think the word used was bizarre, I think, to suggest that the kind of inflows that have come in from Cayman Islands with a population of just about 85,000 odd people, would the Finance Ministry be concerned with inflows from specific jurisdictions, for instance, the Cayman Islands, sir?
See, we are now moving to a regime of automatic exchange of information. And irrespective of the source from which source from where the money is flowing in, we will now start getting the information. So as long as we get the information about the source of the money and about all the tax-related information, I think the government will be able to deal with the situation. And specific recommendations of the SIT, I would not like to comment before going through them carefully.
Well, that was the Revenue Secretary Shaktikanta Das speaking to CNBC TV 18 as the markets open, trying to allay concerns. Also pointing out that the other issue that the markets are watching out for, that is the India-Mauritius double tax avoidance agreement, that is still a few months away from closure, is what the Revenue Secretary had to say. Now, Morgan Stanley's Within This Eye also says markets should not be too worried over the P-note issue. He also asserted that India is in a 3 to 5 year bull market despite the short-term correction that we're seeing.
I think it's premature for us to react to this, frankly, because it's amongst the many things that the SIT has pointed out in its attempt to stop black money flow. So I think it's too early. I think the government has since then issued a clarification that nobody should jump to any conclusions, that any action will be taken after careful thought. Just the mention of P-notes as a potential source for black money, I don't think is going to worry too many people, especially because I think a lot of them actually have credible flows that are coming through. So I don't think they need to worry. The bottom line point that we should focus on here is that we may be, and that's what my view is, in a 3 to 5 year bull market. Now, along the way, are we going to experience certain patches of uncertainty, certain patches of doubt? Certainly. I think the world is certainly looking a lot murkier than India is. You point out to the growth in China, the possibility of a Fed rate hike, the problems in Europe. I don't think these are getting solved in a hurry. So they will keep recurring and they will keep incurring damage to equity share prices along the way.
Within this, I convinced that India is in the midst of a bull market run. Global markets are wavering. Today was a terrible day for the Dalal Street, but the government did manage to have a successful disinvestment today, a 5% stake sale in Power Finance Corporation, while the offer for sale route that was oversubscribed today, paving the way for the government to raise around 1,600 crore rupees with that 5% stake sale. Bids are poured in from both the retail and institutional segment. The maximum enthusiasm, though, being seen in the retail category, which has been subscribed more than 4 times of the total offer. The institutional segment has been subscribed more than 1.5 times. But it's one of the many divestments that the government will have to undertake to meet their ambitious target of close to 70,000 crore rupees for this fiscal. I caught up with the divestment secretary, Aradhana Jory, earlier in the day and began that interview by asking her how confident she is of achieving that target, especially given the rout in the commodity markets and the overhang from China.
It is very challenging for us, but first of all, I'm quite confident that we will definitely exceed the highest of any year. The highest was last year. I'm quite confident we'll exceed it. And the reason of my confidence is that we fast-tracked our process. Our approvals are in place. We've crunched our process. Our preparedness and readiness is complete. It depends on the market, so we'll just have to find windows of opportunity. It's a very difficult market, but we'll just have to find those windows of opportunity to operate. But I think broadly there's a lot of long-term confidence in the reform measures, a long-term confidence in the Indian economy. So I think that it should come up.
And what about all those baskets of stocks that you've been preparing? Can you tell us what the update is? Have you decided on the bankers by, even if you don't tell me when exactly, but this half, the second half, when are you planning to hit the market?
We have a huge number of stocks, target to meet. So we had to increase our pipeline. When you increase your pipeline, you suddenly put so much of supply into place. So then a supply-demand issue, then bankers get picky and choosy in their stocks, so you have no merchant bankers at all. So therefore, with these baskets, take some good ones, take some bad ones, and sell them all for us. So this is the first experiment we have done. It's also an attempt to fast-track the process because, 5 stocks at a time, you can find merchant bankers. And then subsequently, we'll do roadshows sector-wise.
Well, that's the disinvestment secretary. She doesn't have an envious job. She's got 70,000 crores. That's the disinvestment target. She hopes to do better than last year, but last year was about 25,000 crores, a little more than that, but that went through because of Coal India. So she has a tough task ahead of her. Now, China did take its toll on the commodity markets as well. Crude prices continue to remain weak. Prices fell to near 4-month lows today after a steep drop in the Chinese stock market and on more evidence of a global oil supply glut that has halved prices over the past year. Gold prices have bounced up from Friday's lows, but prices still remain near the 5-year lows. Many experts say gold will continue to trade in a narrow band, at least in the near term. Let's listen in to the outlook for gold.
Price has been essentially in this kind of trading range here for quite some time. In this range, essentially below $1,200, and it's tested at $1,080 at least twice now. And then bounces back, essentially because of some physical buying in the market, which helps to put a floor under the price. From our standpoint, we think it's probably going to stay in this particular region for a while. This uncertainty of when exactly the Fed is going to raise the interest rates essentially keeps this pressure on the price to the downside. We've also seen in the sell-off in the Chinese market the situation that has caused investors in order to sell off their commodity positions in order to cover margin calls and equities, and that's why we see some of that.
That's the latest as far as the route of the commodities markets go. Moving on, preferential trade agreements between bigger nations is hurting India's exports. That's the word coming in from the Chief Economic Advisor, Arvind Subramanian. Speaking at a function in Delhi today, the Chief Economic Advisor called for competitive exchange rates to boost exports. He stressed on the need to revive exports to achieve the 8 to 10% economic growth. Listen in.
On exports, I think the international environment is kind of is not exactly working in our favor. We're going to be clearly victims of what in trade theory we call trade diversion, where others negotiate preferential agreements amongst themselves. They lower barriers amongst themselves, which makes it more difficult for outsiders to export into these. Now, the thing is that these markets are now going to be very, very big. Think of the US and Asia. What a big market, especially if it includes China and US and Europe. So pretty much, the biggest markets in the world, we're going to be excluded from that in terms of trade.
Well, that's the Chief Economic Advisor raising the red flag as far as exports are concerned and saying that India's exports may be excluded on account of preferential agreements that are being inked by various other countries. Now, it may be a new week, but the logjam in Parliament continues with an adamant opposition ensuring that there is both houses of Parliament were adjourned again for the day with little work being done. But there is hope for the real estate bill. Ritu, who's been tracking all the action along with Nentar, joins us now with the details. Ritu, it's getting increasingly difficult for the government to get any work done in Parliament, but at least the select panel on the real estate regulatory bill has adopted its report.
There was hardly any business that was conducted in both Lok Sabha and Rajya Sabha today, but we saw some action outside Parliament with the select panel on the real estate bill adopting the report on that crucial legislation, and we understand that the report may be placed in Rajya Sabha tomorrow itself. We also understand that there are more than 35 changes which the select panel is likely to propose, and these changes are regarding 15 different clauses. For example, the rate of interest in case of a default will be the same for both the promoter as well as the allottee. In addition to that, there may be a recommendation which will make at least a minimum 50% of the amount from allottees to be kept in a bank account. The earlier provision was that a maximum of 50% can be kept, and this amount can be taken out only after it is vetted by a certified engineer or a financial analyst. In addition to that, several definitions have been changed, including the definition of what is known as the carpet area, and the recommendation, according to our sources, is that as far as the carpet area is concerned, the veranda terraces and carpet area, that will be excluded from the carpet area. In addition to that, there may be also a recommendation as per which promoters of real estate companies can sell or exit a project and sell it to a different company, real estate company, with the permission of at least 2/3 of the LOTs. So several changes have been proposed, but the fact remains that the Parliament is not running, and it remains to be seen if at all the government is able to take this crucial legislation for discussion in the Parliament. With that, it's back to you.
Ritu, appreciate you joining us. Like the GST, the real estate regulatory bill's fate also hangs in the balance. The big national story, a 12-hour-long fierce gun battle, a siege that ended in 10 casualties. It was one of the worst terror strikes that Punjab has witnessed in recent times. Let's take a look at what exactly happened through the day.
5:15 a.m. Shots in the air at a roadside dhaba in Deenanagar, in Punjab's Gurdaspur district, just 12 kilometers from the international border. 3 men in army fatigues and carrying automatic weapons fire at the owner of a white Maruti car and hijack it. The owner is injured, has to be hospitalized. The bullets hit a roadside vendor who dies.
4-5 approximately बंदे आए थे और वो किसी की मारुति गाड़ी छीन कर सीधे अंदर ठाणे आ गए और उन्होंने अंधाधुंध फायरिंग की.
The terrorists then drive towards the police station of Deenanagar, attacking a Punjab Roadways bus along the way. At 5:30 a.m., the gunmen abandoned the car outside the Deenanagar police station complex and stormed the station, spraying shots in the air.
This was where it all started off at 5 a.m. in the morning. This Maruti car that belonged to a local resident, it has a local number plate. This was the car that was commandeered by the militants. They took charge of this car. They shot the person who was driving the car, who is in a critical condition now. And they used this car first to rush to the bus stand area of this particular place. And from there, they went over to this police station here.
The shots killed 2 criminals in the police lockup, as well as 3 home guards. They occupy the station, part of which is used to house the families of the policemen. Across town on the Amritsar-Pathankot railway line, a disaster is averted. 5 live bombs are found on the line. The bomb squad is called in, all 5 defused. Back at the police station, the gun battle is on. The Punjab police, led by DGP Sumet Singh Saini, engage in a cat-and-mouse game with the terrorists holed up inside. The terrorists gain access to the ammunition store inside the police station, prolonging the operation.
First aim is to see if we can get them alive, so that we can get more access to information.
During the gun battle, a tragedy. Police SP Baljit Singh pays with his life, caught in the deadly crossfire.
They had both firearms as also grenades. They come well equipped. And they were carrying 2 GPS systems.
As the gun battle drags on, a SWAT team is called in. The centre offers the services of the NSG and the army, but is refused.
This entire operation was carried out by the Punjab police, which said that they are equipped and experienced to handle this kind of violence because they have experience in handling terrorist violence in Punjab. So this entire operation was conducted solely by the Punjab police. It was led by the DGP Sumet Singh Saini himself, who has adequate experience in handling of militancy in the state.
12 hours after the militants entered the station, the operation comes to an end. Intelligence sources say the terrorists entered India from Narowal, Pakistan, just 12 kilometers from Gurdaspur. The attack was well planned, the attackers well armed.
इतना मैं जरूर कहना चाहूंगा कि चाहे कोई भी हो, भारत की कोरे की आंख उठाकर देखने की कोशिश करेगा. भारत के सेना के जवानों में, यहाँ के पैरामिलिट्री फोर्सेस में, पुलिस के जवानों में वह कुवत है, उसका मुंहतोड़ जवाब है.
Sources say the initial target wasn't Gurdaspur, but after...
Well, a grueling 12-hour battle there. But former President APJ Abdul Kalam has passed away in Shillong. The 83-year-old Kalam was delivering a lecture at the IIM when he collapsed. We leave you with the life and times of one of India's most loved presidents and the country's missile man. We're back in a minute.
I am born with confidence. I am born with
nation is bigger than individuals. They must remember that.